let's start doing the fun stuff today. Well, I'm doing fun stuff today and Thursday, at least to me. Because Thursday, we're going to dig through some SPACs. I'm really interested to set up a hypothetical for SPACs. I'm probably just going to cap off these trades and take that as a final, and then restart the portfolio for 2021. No, I'll carry it forward. This is a really good win rate. I'm not eager to erase that. But I do want to play around with some SPACs since it is a hypothetical. All right, let's go to it. Go away from moon phases. All right, what we're doing today is we're doing price projections. For long term is the focus, Carringhorn. We're trying to get annual price projections, so what we think might come for a high. Earlier in 2020, I was asked pretty frequently to give price projections and price targets, so I thought it would be a fun idea to try to get a big bucket of them starting here in January and see how many of them are hit this year. This calendar year for trading. The indication or expectation, at least for me, is that we're going to have a overall flat but more bullish to the upside market for 2021, and that 2022 is really going to be the start of that we start to see cracks in the stock market and maybe some real correction. So with that assumption and expectation, most of my projections are going to lean more to the bullish side, but I am providing high and low target expectations for the year. These are, I'll give time frames as to my expectation after the analysis. Time frames after the analysis, like if I think it's going to take 3 months, is this going to happen at the end of the year, that kind of thing, just based on some price action that we're looking at. But again, the real target or goal here is how many of them are going to get towards our high and or low price target for the year. So we'll see if we've got any accuracy there. I do need to go back here because I changed my ATR. We want that on 28. All right. So I'm going to start first with my rationale on the ATR, since this is going to be kind of the foundation of where most of my analysis starts. Oh, can't forget this. One more over here. Fib 161. Okay, my price target is not necessarily going to align to the Fib 161, but after I do my analysis, we'll draw a Fib line and we'll see what kind of the projection is. And this is up. I actually want that up. So there you go. The Fibonacci is going to be used on all of them, but we'll add that after I give my analysis. So I should probably just move that over. There we go. I guess it could, no, it should stay there. It makes more sense. First, I'm going to do the SPY, cause reasons. The VIX doesn't make sense to do this because, again, that is that's a sentiment survey. That's a part of what goes into the VIX calculation. So it doesn't necessarily move. It's more of an oscillator. So I'll show you that real quick on the chart, just so you know. I use the VIX a lot. We talk about it pretty frequently, but this is an oscillator. Up, down, up, down, up, down. That's kind of the way it works. So this is a very long time period. That's all the way back to 2001. So this is not a always constantly rise. It is just an index for how people feel about the market. So take that. That is not going to be used. All right, so we can't forget the #1 meme stock. Tesla's going on the list. Not going to do oil. The only reason I'm not doing the oil is because, again, that's a depressed sector, so I'm not going to do oils or financials. They're kind of wild cards on the market. I wouldn't touch them. Let's do, though, AMD. That's been popular. Give me a couple of symbols you guys want as well. Let's go back to my stock list real quick. See if there's anybody specific that I'm interested on. Oh yeah, let's do Amazon. Walgreens boots. I think that's fair. Hey, Master Yoda, good to see you. Palantir, okay. Now, Palantir is going to be a crapshoot because of the fact it's a recent IPO. But we'll use what we've got, and that one's actually going to also include some fundamental analysis as well, just to kind of get it. Master Yoda says, hey, you heard many people say that business is worth... that a business is worth the cash flow it generates in its lifetime, adjusted for the discount rate of cash. So, assuming that cash has a discount rate close to zero, that means that Coca-Cola is undervalued because they will generate cash for decades and decades to come. Yeah, that is a fair rationale, Master Yoda, but there's a couple of things you're missing in that. The primary thing that most people use cash flow is for companies that are operating pre-profit. Okay, Coca-Cola has been profitable for years, so I think that cash flow valuations are not as applicable because it's still going to return to a mean or a standard of valuation, and that valuation is still, regardless of what people will tell you, is still based off of price versus earnings. Okay, because that is a quarterly and that is a replicatable situation. If you were to value Coca-Cola on cash flow, and this kind of aligns, and so I'm going to go ahead and allow the sideline here. Yeah, I'll put Coca-Cola there too. Good point. All right. But anyways, so if we were to value Coca-Cola off of cash flows, honestly, you could probably make an argument for this being about $90 or so. I'm not going to go into the full breakdown of the cash flow, but if you look at the PE, right now they're trading at about double value, which means they should be trading at about $26, $27, okay? The dividend at $26, $27 would be 6%. Under normal market conditions, that would be considered a fair, while still attractive dividend yield on an equity, okay? Because remember, the equity does not protect you in the cases of bankruptcy or anything else. So with that in mind, with that understanding that the stock in a company does not necessarily guarantee any type of return or safety net for your money, 6% is pretty good. Chopper, you never fail to derail me. That's fantastic. No, technical, but yes, urine analysis. We're peeing on the market. Anyways, so back to Coca-Cola. 6% yield under normal market circumstances is considered pretty fair for an equity. Okay, we are in a market cycle that doesn't follow standard valuation because we have more participants. It is very clear that the dollar is losing value, and the large investors who have real money don't really have any other alternatives. If they want to protect their overall net worth, they need to be able to put some more money into equities. That's not a normal market condition, and as soon as bond rates return, which a bond is a guarantee of sorts, even if it is just on the goodwill of the company, you're still a creditor, right? So a credit card has a right to go after you for the amount of debt that you take out. If you take debt on a car or a house, that's real property, they can then take that back. So the risk to reward is very different, okay? A credit card is going to charge you 20% interest if you got bad credit, and then a car is going to charge you, say, 5 or 6% interest, and a house 3%. That's current rates roughly. So with all of that in mind, okay, the lender or investor, if you will, looking at a company, if you invest in the equity, there's no debt guarantee there. You're just handing them money over to their shares and saying, do good with my money. But if you were to lend out on debt, or your money out on debt, and say, whether it's a secured bond or non-secured bond, hey, use this money. You still have a claim if Coca-Cola goes out of business. And you can say, pay me back the $1,000 that I lent you. And after court proceedings, etc., generally speaking, you will be made whole eventually. Whereas the equity holder is left holding the bag. At the end of the day, after all court proceedings are said and done, usually, not always, but almost 99% of the time, there's nothing left for shareholders. That's why bankruptcy is a thing. It pays off taxes, then it pays back employee payments, and then it pays to debt. And after debt, if there happens to be anything left over at the end of the day, it goes to shareholders. So that's why you should not use cash flow on a company like Coca-Cola. Well, it doesn't matter. It's historics. Okay, Coca-Cola is a proven and profitable company. If you look at the valuation gauge of the PE, 27 years is what this is telling you. All right, that is 27 times their earnings. It will take 27 years, or they need to increase sales by 2,700% in order to give you back a return on investment. 270% to give you a return back on your investment. Okay, that is not as acceptable to an investor. 15 is the average. It has been the average for way back. Okay, and just because we're in times that aren't certain does not mean that the rules are changing. And this is my favorite chart to highlight that, which I put in the Discord today. So this is the mean or average. All right, mean is 15.87, median is 14.83, which means under normal market conditions since 1880, the market should be trading at about 15 times earnings. That's considered fair and equitable to investors. And as soon as interest rates start to rise and investors can actually get something on their money, they're moving out of the stock market and back into the bonds market. And when that happens, valuations are going to plummet. So that's why I'm such a big advocate for focusing on PE. Yes, cash flow is good and it makes sense from a technology standpoint, but it doesn't make sense for a company that's making a profit that's not expected to gain exponential market share. If you want to buy growth, then you're looking at small caps, small companies. Coca-Cola is not a small company. Coca-Cola has grown to the size it is likely going to grow. Their job is to maintain the ship and not lose out to some upstart, which I really doubt would happen. Coca-Cola has a lot of defenses in place. Evening, Filthy Cash. Good to see you. Welcome back. We're doing fantastic. All right, so I gave you the rant, Master Yoda, but we are actually targeting and talking about price projections and targets for 2021. So this is my list here, 2021 price targets. You can't see that because of the stream thing. Let's stick that over my head until it gets in the way. There we go. 2021 price targets is the topic for the day, and we're just going to put out a bunch of symbols and do some price targeting for the year. I'm going to try to give time frame if I expect it to be shorter than the 12 months, and we're going to go and do reviews based on technical analysis, and I'll kind of give you my thought process as we go through. Kenneth Tales, how much do I use RSI when buying? I don't use RSI. I use stochastics, but for all intents and purposes, they're not the same. Okay, the same calculation doesn't go into both, but they provide the same target data, right? So if you're talking about that, then technically I use the stochastics for every technical trade I set up. Okay, fundamental trades I don't pay as much attention to, but every technical trade I do use my stochastics. It's one indicator that I rely pretty heavily on. And again, it's very similar in terms of output to the information that RSI would be providing. Fuel cell on the list. All right. FCEL. Good. All right. Any more symbol requests from the group? Only rules. No China. No oil. No real estate / finance. Goog? Yeah, I can do a Google. I think that's good. Lots of technology there. All right. Let me go back to this. Oh, yeah. I want Intel. That's going to be interesting to watch this year. Intel. Let's do Constellation Brands because I've talked them up a little bit. STZ. And who was the other one? Altria, MO. I've talked them up. They're going to go on the list. Can we do one bank one and one healthcare? We can do a healthcare. But the reason I'm not going to do it on finance is because I expect very specific fractures in the market in the time frame that we're projecting. And so I would be doing, if I was doing this myself, a very serious disservice to try to price project on finance or something that I would never actually get into. And this is kind of a discipline that I think that should be perpetuated more in the market. If you don't know what it is you're investing in, or you have reason to suspect with foundation that things would go opposite what you're trying to trade, you're putting yourself immediately in a position of conflict. Okay, I think this stock is worthless, but I'm going to buy it anyway. You're setting yourself up for failure. Stock Jock does a really good job about this when he talks about his day trading. Okay, he's like the daily trend. If I'm looking at it, because he's purely technical, the daily trend is down. I won't trade this stock today because I'd be putting myself at a disadvantage. The trend leading down is an indication of pressure, and if you're trying to make money on a pop, you're setting yourself up to miss or follow some sort of a false positive, if it makes sense. But if you've got a specific healthcare you want me to throw on there, go ahead. I have Walgreens Boots, WBA. Not directly healthcare, but kind of dotted line. Disney? Yeah, let's do Disney. Disney. DRQ. Who are they? Drillquip Inc. This would fall into energy and oil. But who is it? So I will hold this or state this when it comes to oil. Generally speaking, midline services are okay. So if you're all right with it, Law Dune, instead of DRQ, I would consider putting MRO on our projection list, because they're going to make money on the transference of oil. So really the only thing that would bar them from having a successful year is going to be poor management or a complete shutdown of oil use or consumption, which it's dropped, but it's not going to zero. All right, we'll do MRO then. I'll go ahead and give room for that. And then can we add an industry column just to see if one sector does better? Sure. Well, I'll just add it here at the end. Sector. And then UNH, United Health. Good. All right, we will go with this list. 1-to-1 drill etch AG. Nope, we're not doing that one, Master Yoda. MRO is as far as I will go in energy. All right, UNH. All right, we're gonna do the first one, SPY, and then if you guys stick around, you'll see me work through the whole list today. I think that, what is that, 15 stocks? Yeah, 15, that's good. So we're gonna do 15 price targets. All of these get a date of today, which is 1/5/21. Whoopsie. Undo that. Comb up. Gosh darn it. All right, there we go. I can't click drag because when you do that on Excel or Sheets, so it goes 1, 6, 7, 7 in order. Obviously, I don't want that, so that's why I'm copy pasting. All right, just for anybody who is following. I do a good job on Excel sometimes. Let's see. F cells, technically energy. If we want to drop it. Yeah, the reason I put that without hesitation is because, oh, my sister's telling me. Hold control and what? What do I do? Oh, I drag down and control? Come on now. Oh, you're so smart. All right, thanks, sister. And then if I drag 2 cells, that's also true. All right. So much for me bragging about knowing something in Excel. Immediately got shown up. Thanks, guys, though. I do appreciate it. Wait, is that actually Brian's sister? Yes, that is my sister. She lurks most of the time, but I do appreciate her support. So also Control D. Control D. All right, I just learned 3 different ways to do it better. All right, well, that's the last time I say on stream that I know anything about Excel. I know nothing. All right, thank you guys. I do appreciate that, though, genuinely. All right, we're gonna do the price list as I go. I'm just gonna fill it from left to right. Unity, sure. I'm actually glad to do that. So let's do Unity, and then Control D because I just learned that. All right, what's good? Master Yoda, I'm afraid to hit Control W. Do it anyways. Jerk. Reopen close tab. See? In your face. Alright, there we go. I knew that was going to happen. I knew something was there. That's the new Control F4, because I know exactly what Control F4 does. So, alright, SPY. Oh, no, not SPX. We're doing SPY. Alright, currently 370.80. I'm around to pennies or dollars, depending on if it's like super close. Going to daily, and we're going to do a year price target. So right now the ATR for the last 28 days is 476. And then this simply equals that divided by that. Boom. I do want that to reflect as a percentage though. So, and I do want these to reflect as dollars. Wow, dude. You know, I was hesitant, Master Yoda, because I saw somebody stream recently and they were told to push Control W and it did the same thing. I just couldn't quite remember if it was Control W or something else. Because I was in the middle of actually trying to be helpful to the streamer. Because, you know, people do that online. Help each other. All right. Anyways. So here's our price target now. Up, low. And I will not do fibs so that fibs do not influence my own projections until after we've done a review on the stock. So right now we're looking at an average daily volatility on the S&P 500 of 1.28%. The way that I use ATR, and I'm going to recap this for y'all, is you first decide how much conviction, right? How much you actually expect the stock to move. Okay, so do I think it's going to be a big move or a small move? A small move, and that's what I'm projecting for 2021 is going to be a small move. You use 1/3 of your projections when you're trying to calculate out ATR. A big move would be 2/3. So the first thing I need to know is how many trading days roughly are in 2021. We've already missed what, 2 at this point? Well, it would be 4 because 3 Friday, only 3. So whatever number I come up with minus 3. So there's 52 weeks. Okay, you have an average of 5 days. Okay, you take out, I think there's 12. No, there's 8 market holidays. Okay, and then we're also going to remove the 3 days that we already lost. So that's 249. Okay, it's not going to go in your favor every single day, all 249 days. There's going to be some down days. There's going to be some flat days. So we are removing 2/3 of this. So times point, well, actually, we're only going to remove 1/3. Sorry. We're removing 1/3 of it. So times 0.66, that's 164 days. Okay, that is how many days we have for the year. And I'm writing that down so I don't lose it. Trading days in favor. Well, yeah, I would say in favor. That's what I'm going to use. It's not exactly right, but that's what I'm going to say. Trading days in favor, 164. That's how many trading days we expect to go our way. We lost 2 days, not 3. I'm counting today as already spent, Lord Merc. Friday was the trading day, was it not? Because Friday, oh no, Friday was the 1st. You're right. So there you go. One more day. We'll go 165. Good call. Friday was the 1st. Missed that. Hey, Kem. Good to see you. Welcome, welcome. Your unrealistic expectation of 100% this year just got more unrealistic. Yeah, sorry. You've only got, because again, things don't go one way in the market. Up, down, and sideways. That is the guarantee I can give to everyone. And that will hold true until a meteor strikes the earth and the market is no more. So, that's it. What? My wife says I'm wearing the wrong shirt for that statement. I think it's dirty. Anyways, so 165 days in our favor. The next thing is you're not going to get 100% of this volatility move. So we're going to take that same rule or application of how much your expectation is. I'm using 1/3 of it as favor. So 1.28 times 0.33. That's how much we get. Is 0.42. Now we're going to multiply that by the days in favor times 165. So I promise I didn't set this up before stream. Our highest price projection on any target is going to be 69.69%. Nice. So if for any reason we put a projection over that, which is funny because guess what? Fibonacci increase percent, 61%. Just saying. So that's going to mean that a lot of our price projections fall to the pretty close to the fib projections. So this is where we're starting. Okay, this is my thought process. This is something I've done 1,000 times over in my career. I don't think I come up with 69.69 most times, but this is where I'm starting for the S&P 500. Everything is going to follow the S&P's bench. Okay, best possible year that S&P 500 can have here is going to be 69% return. Okay, Not a fan, because that means that the S&P 500 PE ratio is probably going to increase to over 40. Well, that's 37, so it'd be over about 52 PE ratio. That's pretty bonkers. The high here would have been in 2000. Okay, so this is the dot-com bubble. In 2000, the high would have been about 44, almost 45. So I do expect that probably this year there's a possibility of surpassing the dot-com bubble era. Buyer beware. Okay, we're not getting out of the market, but you need to understand going into this year that very much like the recovery of last year, things aren't going to continue to always make sense and be logical. It doesn't mean you can't make money, but it does mean that you need to be careful and understand that real correction will come eventually. All right, so I'm going to add a new one here to the left, and this is full year. Full percentage max, that's what I want. Max percent move. That's what I want it to say. And then I'm just going to put this as a formula, equals that times 0.33 times again that. There we go. This one gives me 69.89. Not quite as funny, but there we go. 69.9. What did I remove? How am I getting two different reactions? I don't care. Doesn't make that big of a difference. It's close enough. All right, so here's that's our max percent move, and there we have it. So this one, these two columns can auto populate and fill for me along the way. Okay, so now I'm going to go to the chart, okay, and this one is going to actually require a little bit of thought. Yes, I have this base number, okay, but when getting price targets and projections, I want some sort of confirmation myself as a trader that this percentage move is realistic or has some form or level of precedence, okay? A 69% move in 1 year for the S&P 500 doesn't really happen. Let's see. This one. I was on the right one. Biggest S&P annual gain. Don't need to support you, CNBC. We're here all the time. No, that's not the one I want. Don't want a daily. Don't want the average. Here we go. Historical annuals. This will tell me. All right, here we go. 1930, the biggest annual gain. Let's make sure this is S&P. Yeah, S&P. Biggest annual gain here was 46.59%. Okay, so I'm a little bit aggressive making a call on that 69% return. The number is still helpful to me. Okay, that still kind of helps me give a gauge of reality. But with a 44% return on the annual side, I can't alt tab in tabs. The 46.5% return, that means that at some point it had a significant low. So if we go to the crash before negative 15%, that gets us up to 65% or I'm sorry, 45, 60%. So that's 10% off, taking into account the previous year's low. Okay. But it is within the realm of possibility for a high and a low. So the reason that I put this number on the chart, again, I can't alt tab, of this 69% is the max percentage move needs to equate for the difference between the high and the low target. Okay. It is not 69% based off of current price. Okay. So what I would do at this point is, let's see if I can formula that out. This equals, there we go, times this times 0.33, and I need to put that in brackets. Let's see if that worked. Oh wait, and then times 0.33. I need another bracket. So that's 85. So I need this to go minus 370. How do I do that as a bracket? What's the formula? It's a multi-step. So I need the 85 to equal, well, I mean, I could put another cell over to the left. Let's see, control over. That was stupid. That's not at all what I want. And then this one equals that minus that. Is there a way to do that all in one cell? I think there is. I don't know it. But that would be, oh, I'm sorry. No, that's a plus, not a minus. Plus. There we go. 456 on the high side. Anyways, listen to this. Saying we'll crash in 2021. If we get a 69% return, then we'll have a crash the following year. Listen to this. That would be a crash for 2022. But yes. Hey, Auntie Sinjwani. Good to see you again. I have been well. I hope the same for you as well. And then the low. Let's see. I did this one by 0.33. There's definitely a way to do that, and it's bothering me, but that's okay. We're going to do the same here. This, and that would be minus 85. All right. Hey, welcome, Hanbari. Welcome. Glad to have you. So here we go. We've got a high price target of 456.63. This could actually be a little bit higher because if I was going to do this like extremes, so I'm overly optimistic, I would say that this would be a plus 0.66 of the expected move. Okay, so instead of a 3.3, change that to a 6.6, and you'll see that the high-end price target for the S&P 500 could be as high, well, the SPY, this is the underlying ETF, but the high for the SPY could be as high as 541 for the next coming year. And then the low, which I highly doubt it's going to go this low this year. I don't expect that until 2022, but then the low is at that price. But I'm going to stick with right now just the 1/3 on the spreadsheet for targeting. 1.3, and then I am going to add another caveat column. This is getting super heavy, but my high target. And anything that I am overly bullish on, I would assign an additional upside move. But for the S&P 500, again, given kind of the concerns overall for the economy, I'm not going to go overly optimistic in the projection. Okay. It can hit the 500 plus. That would be 530 some odd. But I think that the 456 is actually fairly reasonable. Master Yoda, your high price on the SPY is 420.69. Nice. That's hilarious. Anyways, Amin says, do I day trade or swing trade? I do both. I primarily focus on swing trading. It's the first week back in the market after a long vacation, so I won't be placing any actual real money trades. I might on Thursday, but I doubt it. And that's just kind of a personal rule of mine. I don't chase. I don't have FOMO anymore. This took years to develop, so I'm not saying it as I'm better than most traders. It's just a discipline I've developed. So that's me. I do a little bit of everything. But my primary focus is swing trading, and I focus more on cash secured puts. I'll do covered call writing on occasion, but my primary focus in investing is cash secured puts. La Adun, you want no FOMO. It takes practice, La Adun. I know it sounds silly, but something I did when I was younger to increase my patience is somebody said, something society's losing itself and people have no patience anymore. You can't even wait for the microwave to end. So I used to literally sit and watch the microwave for the last 30 seconds and not let myself touch it or open the door. And it's silly, but little things like that are how you build up more patience and resilience. You start to realize and lose that I have to act now impulse, because we all have it. We all do. So that's a weird ass tidbit, but that's the one you're getting. What broker do I use? I use Charles Schwab. I was employed with them for 11 years, and I held licenses, so I'll give you my disclaimers. Welcome to the channel, by the way. But I use them for my trading actual executions, as well as the majority of all of my research. We are what we do. Good tip. Thanks. My pleasure. It's a weird one. I never thought I would actually verbalize that as a tip to someone, but it literally is something I did in my life to increase my level of patience. And it worked. It's one of the things that worked, I should say. So my high target on this, let's go look at the chart and see kind of what I can dig up here for the S&P 500. And we'll see if we've got a high-end price target. Now, because these are annual target expectations and moves, I go out to a longer time frame. Okay, I want to see what happened over the last 5 years on a weekly basis. Okay, I'm not as interested in this volatility for just last year. That's not the only thing that's important to me. I kind of want to visually see what these moves here look like. All right, so this would be the low from 2018 December to the peak actually in 2020, just before the crash. So I'm interested in that. I'm also interested in this longer term rally that was kind of slow and steady. This was a low in 2016 of February, and then the high here is actually in 2018. So this is a 2-year time frame. All right, and this is a 1-year time frame. I expect to fall kind of somewhere in between these two moves. So for me and my price projection, I want here as data points. I want here and here as data points, so you know what I'm looking at. Okay, 1, 2, that's a 2-year time frame. 3, 4, it's a 1-year time frame. I'm expecting the next year to fall somewhere in between these two moves, so I'm going to kind of project that out. Listen to this. I will not pull a joke on that one, but I like jokes. I have no clue what it is though. All right, so exit draw mode. We've got a low target here, or price, I should say, 187 to a high of 286. So 99-point move over 2 years. So 99 divided by, well, that's easy. That's almost a 50% return over 2 years. Yeah, 55% for a 2-year time frame. And then we have here, stop moving, circle. Delete you. All right, we have here a low 233 by a high of 338. So a 100-point move. So that's a 33% move, right? So 100, well, actually it would be divided by 230. So that's another 40% move. 70% volatility expected for the coming year. Yep, that's how I'm going to do it. We're going to go ahead and say that my high price target for the S&P 500 is actually going to match this. Okay, so our expected 1/3 move to the upside gives us an additional 85. Because we've got 2 relatively big years or big time frames back to back, that 50% move would have, the 55% move would have been 25 year over year, because that was a 2-year time frame again. So I'm okay following this as an expectation. So my target is actually going to be equals 377 or 370 times. That would be about 130, 1.33%. So there you go. So that's a full return plus the 1.33, or the 1/3, 33%-ish move. All right, that kind of lines up. Okay, my price target a little bit higher than this one is as my adjustment, but that's my thought process. So I've taken you from beginning to end on price projections and expectations for the year. Do you have any questions in my thought process or logic along the way? Did you miss any steps that you want to question? Go back to black because I don't want it. Sounds good. All right, no questions. Let's do the fib and let's see how close this comes up. We're gonna do Fibonacci analysis now. All right, on the daily, we're gonna go from the low to the high. This would be the high, so, or I'm sorry, from the high to the low, because we're expecting an upward move. So high price point down to the low price point, and we want the 161 level, which comes in at 478.21. Ingy, good to see you, by the way. Welcome back. Aloha to you, my friend. All right, so Fib 161 was 478.21 equals 478.21. All right, there we have it. We've completed our first one. Time frame for this, I think it's probably going to end up in the Q3 range that we'd hit the high end price target. Kind of given the ebb and flow that I expect, there's a little bit of volatility this month. I think things are going to quiet down. The reality is we might actually hit the high end price target for the year in Q2. If we do hit that, then I'd expect some cracks to be seen in the overall market beforehand. But my expectations of relative quietness moving into the market overall during this lull after the transition is that I would probably put for the S&P as a whole a price projection to hit the high side targets in Q3. So that's just my analysis. That is my statement, and now it is in writing so you guys can all see. And this one has no sector, so NA. There we go. All right, now time to wash, rinse, and repeat. I'm going to work through the other ones a little bit quicker, but you can kind of see my back and forth here, my thought process. So hopefully you found some help in that. Master Yoda says, is it true we can predict a crash using RSI? You notice all crashes happen in overbought territory. No, not necessarily, because sometimes an overbought territory is simply going to be a retracement or a move back towards consolidation. That's kind of a correction, not necessarily a crash. However, if you really kind of scrutinize it, you'll see that most crashes are preceded actually by an oversold indication on the RSI. So it drops not from the high level back down to normal ranges. Okay. Oops. Why am I drawing fibs there? Go away. Okay. It's not dropping from the high area down to the mid ranges. It's actually falling this here. From the high to the oversold. That's the indication, because a lot of times it just does this dip and it goes back to normal. Very rarely are you going to see the free fall from overbought straight almost into oversold territory. 123, welcome, says, sorry to ask, but is cryptocurrency a scam? Yes and no. Realistically, it is an alternative form or access to currency. It's set up, okay, so I understand both the technical and the financial aspects of it. It's not really got a value, but the dollar or the euro or the pound, because Brexit, right? Well, they stayed on the pound anyway, or the yen or the won, or any other currency around the world is backed just simply by the faith that you can exchange that for goods and services. Okay? Money does not technically exist. So in the same sense, cryptocurrency doesn't exist. And it's also just based off of a bunch of ones and zeros and collated data or collected data en masse that's not replicatable or reproducible. It's identifiable, independently identifiable, and whatnot. So, yeah, crypto is technically a scam, but so is the money you hold in your pocket. So it does hold a real value to many investors and many traders. My guidance is, if you don't understand cryptocurrency, don't chase it. Don't. It's not worth it. Not worth the time, not worth the effort. I've got 19 years in finance. I have successfully, I have also unsuccessfully traded cryptocurrency personally. Also personally, I've not touched it for the last year and a half. So I'm not actively investing in cryptocurrency, even though I actively follow it. And I don't have anything wrong with it anymore. As a matter of fact, I personally think that cryptocurrency is moving into a position to offset gold, silver, and precious metal, which also holds no value. Just saying. All right. So the arbitrary value with which we assign to things as a society is where it holds its sway and your ability to transact with it. Cryptocurrency has had a lot of barriers removed, a lot of additional oversight and regulation added. So I do think it's a viable investment or trading vehicle. And I hesitate to say the word investment because if you don't know what you're doing, honestly, don't invest in crypto. Don't look at it for diversification. Don't put it in your portfolio. Just don't. All right. But if you're following it, then and you're actively trading it, there's lots of opportunities from both an investment on portfolio management aspect as well as taking advantage of technical trades. Did I earn my money? TBH. Because you don't want to do it and it becomes and learns bothers. Like 2008 crash. Did I earn? Oh, there you go. So did I earn money on cryptos? Like I said, I lost and I won on cryptos. My biggest trade that year was actually in the stock market and had nothing to do with crypto. And my biggest loss was in crypto. So the crypto gains that I had were probably in the realm of 22 2% at best. Okay, and that would have been over a 3-year period. And then my biggest loss, which happened in literally 5 days, was 28%. So net, I'm lost in crypto trades myself. So I guess that answers it. Donnery, good to see you again. Hello, hello. Welcome, welcome. What's my favorite band? Do I like Bollinger Band? That's a setup just for a pun. I love it. All right. And this is so dark. Russell the Fourth, your color, I can hardly read. But good to see you again anyways. Can I do some PLTR, Palantar TA? So I'm actually in the middle. And you guys will get access to me again in probably 30 minutes. But I'm in the middle of running down price projections for the entire year of 2020. That would fall under technical analysis, and Palantar is on the list. So the answer to your question is yes, but I got other stuff to work through. Hey, there you go. I can read your color now. Thank you. That's just a problem with my thing. I use dark mode on Streamlabs. I use dark mode on a lot of things. So you can keep your color. You got to realize I'll probably squint at you a couple of times. But thank you. All right. So yes, Palantar's on the list, but next is Tesla. All right. Anybody who just joined, go back and check the VOD to see the process, because I am definitely going to be rushing through and kind of, I might overlook some of the process along the way. But we've got 15 more stocks to run through. Wait. 16 stocks to run through on this price projection. So I kind of want to move along a little bit so that we can go back to our normal open Q&A. Oh, that hurts. All right. The reason I don't like that is because this is it looks like it's going to really have a hard time for me. I just don't buy the hype. But you don't bet against Musk. All right, so right here we've got an ATR of 30.31. Current price is 738.65. 738.65 and 30.31, right? Yep, exactly. All right, so we get our volatility percent. Why did this not calculate? E3 times 0.33 and 6. And what? That should actually be N5 always. So 5, enter. All right, all y'all with the Excel skills, how do I tell this to use N5 all the way down without going through and manually typing it? Because this is what I do when I run into this problem. I just hit that, I click, backspace, N5 all the way down. $sign doesn't help me. So the N5 is this cell is what I'm calling. Copy formula, paste with shift down. All right, copy formula. So control shift, copy. But the problem is that that's going to put the E3 for all cells, but I actually need it to progress like the normal drag function does. Put a $sign on the 5. So $sign N $sign 5. Wait, maybe. All right, let's try it. Doot. Oh yeah, because that's the same call function for going across tabs. So I'll bet you that'll work. All right, so there we go. Looks good. It worked. Come on, drag down. Doot. I learned something new. You're genius. Thank you, Purple. All right, and just to make sure, we're gonna put some gibberish here. 130, 20. Brilliant. All right, it's exactly what I needed. All right, that's a real number. That is accurate. The max percentage move for Tesla is not guaranteed, but our projection formula is telling us that there's a very real possibility Tesla could increase 223% this year. I won't say no, because I'm what was it, 800% if you take 2020 from beginning of year to the end of year into account. Larthantos, what's going on with Bitcoin? We'll talk about it after we finish up the sheet. We'll dig into that just a little bit. All right. I think this can stay. I don't need that. This. I love formulas. That works. All right. A low price target. There's a small possibility, however small it is, that we could see a $200 price in Tesla this year. Not likely, but possible. And this is, again, based off of the previous year's volatility moves. Lartantos, Tesla's too expensive, though. It's like a 4K pre-split price now. That would be, what is it, 740, we'll call it, times 5. 3,700 pre-split price. A little bit, not quite to the 4K mark. But no, I fully agree. I personally think that this shouldn't have been in this price range to begin with. My high price projection for 2020, based on valuation, was honestly only about $500 pre-split, which would be $100 now. So that's kind of where it falls in. Purple, in Excel, you can double-click the title square to propagate the formulas down instead of manually dragging. Uses the column to the left to determine where to stop. What? Let's see. Can I do that? I can test. I would have to do this one. There you go. It works in Sheets as well. But this one is a manual thing because I'm putting that based on my review after I look at the chart as to where I think it should land. Okay, so you guys heard it here first on Tesla. Right now, one of our high side price target projections is $1,200 on Tesla. Is it warranted? No, I can't stress that enough. But is it technically possible given price action? Yes. So don't be surprised if you see Tesla hit 1,300 next year. As a matter of fact, I might do a no math and just say 1,300 is my price target projection for Tesla. Let's see. What do we got? Max, what was it? 8x last year. All right, we're going to go on the weekly again. What do we got? This is from February 2020, just pre-crash. We had a high of 188. And then the low would have been in June, all the way down at $44. Let's see some more normal times for Tesla. So this is January, March of 2014. We had a high price of $52. And then a low in May of $35. And then I've got a low here at 31. And this is in February of 2016. Followed 3 months later by a high of $52. Okay, so 590, this is all the way back to 2012. We got a low here of 570. and then it shortly thereafter peaked at a high of $38, almost 40. So 7x, 8x is definitely possible for Tesla. I would hope for some level of consolidation. After a significant move, Tesla doesn't tend to do much when it moves into a consolidation phase. The problem with trying to put Tesla into consolidation now, or based off of today's price, is the amount of momentum that's still behind it. So I'm going to look for a relatively small uptick in price. We're going to base it off of that. 36 up to 76. 52 or wait. Yeah. 40 divided by 36. 1.11. It's a 10% increase in price from its current range. I don't like that. It's not big enough. All right, current ATR is 30. That gives me 223 for the year. Instead of going 0.33, I'm going to go 0.66. It's 147, and I think that might actually be a little bit closer to reality. So equals that times 1.47 and change, rounded up to 48, but we'll do that. All right, so my price projection on Tesla, and I fully expect that it is probably going to go higher than this point, but if I was setting up a trade, I would only try to capture this move. And again, I won't trade Tesla. I just don't believe in its valuation, so I won't touch it. But if I was actively following and trading Tesla, that would be my high side price target, 1,091.72. All right, let's see what the Fibonacci has to say. Back to the daily. What was this? Yep, that's the April low. So most recent high, all the way down to the low. Scrunch the chart. 1165.63 is the Fibonacci. 63. Boop. There you go. There you have it. And this would be dollars as well. Time frame for my price projection is Q2. I really think that this is going to happen relatively fast. This could even happen in Q1, but maybe not, because again, the price has moved. So without Elon, saying, "Hey, let's do another split," so that Robinhooders can jump in, there's not going to be as much accessibility. People are starting to get priced out in this range, actually at the $500 mark or so. So because of that, I think Q2 is a fair enough assessment. Lerthontos, yes, this is going in the Discord. So I will be putting this sheet, exporting it afterwards. And then you guys we're going to put I'm going to highlight greens when targets are hit. So that we can see. But there you go. There you have it. There's Tesla. All right. Next on our list was AMD. All right. Currently 92.28. Come on. Did I break it? Come on now. There you go. All right, and ATR is $3.03. 03. All right, max percentage move on AMD based off of current volatility is about a 178% for the year. Again, I do think that. Oh, hey, Porto, welcome. Thank you for the Discord command, and Latantos, obviously. Everybody at any time is always welcome to come join the Discord. When I'm not online and not streaming, that's a great place to ask questions. We've got a great community, and we've got a lot of very valuable participants, so don't hesitate to throw questions, because even if I can't answer, somebody can. But yeah, there we go. So AMD 92.28's current price, high side from this projection's about 146. I'm actually going to do fundamental on AMD myself. Come on now. Hey, at least it didn't log me out. Love it. Currently, forward PE for next year is at about 50 times earnings. What would I pair this against? Let's try Taiwan Semiconductors. I always forget their silly symbol. TYI. Nope, that's not it. Taiwan. What's Taiwan Semiconductor symbol again? Oh, there it is, TSM. Ah, I got it. All right, TSM's trading at 30 times earnings, so AMD is already overpriced based on their forward projections. Let's see what their revenue beat was, though. Currently 128. Statements. No, earnings. I want earnings. 32 cents. So most recent earnings release for AMD was 32 cents. I'm going to project that out for a full year times 4. That's $1.28, and then we take the price 92 divided by $1.28. It's 72 times earnings. AMD thinks they're going to do better. So I actually fundamentally cannot back up AMD as a runner anymore. If anything, they're trading slightly overvalued based on growth projections. So I'm going to go ahead and purely accept the technical move on this one. Let's look at the weekly, though. What's this? I didn't draw those arrows recently. At least I don't think. So I'm looking at this high. That price. This one, I think. Small dip, consolidation to the high side. That's the move that is most interesting to me on the chart. So I'm curious to know what that move looked like. We've got a low of 1603 and a high of 35. A high of 35. Where's that calculator at? 19 divided by 16, 1.2% increase over current price. I'm okay with that. So equals 92 times 1. What did I say? 18. 1.18. 108 is my price target for AMD. And then the Fibonacci. Can't forget that. Back here. Fib retrace. Bop and bop. And that gives us 195.70. Pardon me. Excuse me, that was rude. All right, so with that, and then I would say price target on this one is also a Q2. Oops, Q2, there we go. All right, so not bad for AMD. Quick rundown, they've got 3.2% volatility. High side price target from the technical could be easily as high as 146. My personal target's going to be at about 108. And then the Fibonacci has it going as high as 195. So there you go. Are we expecting La Adun? The only 1, 2, 3. The only reason I wanted TSM when I was digging through was because I think it's comparable enough in terms of sector and technology to match against AMD. Another option would have been to look at NVIDIA, but based on Taiwan, it was kind of overpriced. Based on NVIDIA, I made an assumption that it would also be kind of overpriced. So AMD currently overpriced in the market, and that's why I used Taiwan. It's just to give me a overall gauge of the sector and where it's at from a valuation standpoint. And then again, right here, NVIDIA falls right in between the valuation for AMD and Taiwan. But I chose Taiwan because it was there. Do I think NVIDIA will split to get more buyers? I don't think NVIDIA cares, honestly. It is, so what we have to realize or remember as disciplined investors, share price means nothing for a company. All right? The company themselves, whether it be Tesla, NVIDIA, Amazon, Google, whatever, the share price means little or nothing for their day-to-day operations. Okay. Share price goes up. Shareholders are happy. CEO gets a pat on the back and sometimes a bigger bonus, right? Share price goes down. Shareholders are angry. And then the CEO has to then start providing answers as to why the company is not doing as well as investors perceive it should. However, the underlying day-to-day operations of the company, share price means almost nothing. If a share drops, and this is a good point, Ken, if it drops significantly, then they become a potential merger and acquisition target. If it rises significantly, then the company could decide, hey, let's issue more shares to raise cash, whether we need it or not. So that's kind of where the whole share price comes into effect for the underlying company. Otherwise, most moves mean absolutely nothing. For the day-to-day operations, that's why I focus so much on value in addition to technical analysis. So look at the fundamentals, understand the company and how they make money. But the share price is not the company making more money. It's shareholders betting that the company should make more money or could. Or realizing that it actually is. There you have it. So it's best to wait for share offering than buying at the company. Definitely don't buy the company at the top. Also, there's no guarantee and there's no formula and there's no expectation that a rising company should offer new shares. It's just an option that's available to them in managing the company. Okay, so your investment decision on whether to get in or get out needs to be based off of either fundamental analysis. All right, do I think that this company is currently undervalued in the market, or do I think that there's a strong indication from a technical trade? Do I think I can make money off of short-term swings? Yeah. Well, it's also ridiculous the number of folks that are scalping the NVIDIA cards. It's ridiculous. Same thing's happening in a lot of tech, though. That is a big part of the reason for the semiconductor shortage that we've got going into this year, is just the high demand. Because it's not just gamers, it's also the work from home folks. Okay, companies need more technical assets, and while a lot of companies are able to leverage office assets and send them to people's homes, not everybody is, right? They need new computers, new laptops, etc., to be able to issue for folks to get to work on their home networks. The thing is, when it comes to technology, and I mean you're close to InfoSec, so you're well aware, I'm sure, but a large office building can operate off of several generations old hardware, because the network can be optimized to allow that to work well. Okay, but if you take some of that office equipment to your house, you very quickly realize that it's not compatible with current generation routers or etc. So I've seen that in the past many times where, you know, somebody's got a laptop that works just fine in the office, but as soon as they get it to their home, it's crap. So that's just playing with technology. NVIDIA's acquisition of ARM's pretty huge. NVIDIA's weekly chart looks like a big bull flag. It does. NVIDIA's not on our list. I might add it. By might, I mean I will. Let's see, does that work? It works. Ha. Thank you guys for teaching me new Excel tricks. I'm gonna get good at this one day, I think. All right, so that wraps up AMD. We're gonna go to Amazon now, and then after Amazon, I'm going to redeem a bio break for myself. What? You're not supposed to be influencing my pricing. All right, go away. Okay, so current price for Amazon, $32.13.18. So we're just gonna say $32.13. ATR is $77.51. That gives us all of our price projections. So high price target is right now $4,600 on Amazon. Believe it or not, that's kind of interesting to see. My price target for Amazon, I'm not using the standard valuation for Amazon because it's not making sense. I do, however, think that Amazon is setting up for another breakout session because of the fact that they are in consolidation for the last quarter. After recovery, people just kind of forgot about Amazon. And that makes sense given the current market conditions. Not a lot of retail investors are going to have access to actively push or trade a $3,200 stock. So if I think that there's a potential for a split and another breakout move, I'm going to be a little bit more bullish, which means I'm going to basically do the same calculation for the 0.33 and instead at 0.66. So this equals that times 0.66. So what? No way. Is that accurate? Oh, that's what I did. Times 1.66. I was like, that's not right. 166. There you go. 53. Whew. I'm super bullish on Amazon. Holy cow. 1.66. So 5,333 is mine. Just call on Amazon. Do I think it's worth that much? No. All right. Just understand. I'm doing this on technical analysis, not fundamental analysis entirely. I'm checking some fundamentals. But that is just kind of a, hey, let's see what's possible to happen this year. The high side Fibonacci 161 is coming in at 47.2841. 472821. There we go, because we want it accurate as possible. I do think that Amazon's going to continue to sleep a bit, so this is probably going to be a Q3 move in my opinion. Maybe even a Q4 move, actually. So I'm going to put Amazon to sleep because they're in no rush to do a split. It's possible, it's been rumored, but I don't think that Bezos is in any mind to push that right now. 1, 2, 3. Can I explain IPOs? A lot of the news talks about it, but you have no idea. Yes, I will gladly talk about that. And I appreciate you joining. Normally in my streams, for the most part, a huge section of it is devoted towards Q&A. But I'm focused on getting some of these price projections out on today's stream as priority number 1. Whereas normally your questions are priority number one. So we'll get to that though, I promise, just later. All right, and then as I said, I hate to break a momentum because I actually feel good, but I have to go when you have to go. So here we go. We're gonna do a bio break. Take a minute, guys, to get up, get a drink, stretch, go to the bathroom, all the things that I can't do on camera. And we will be back in 3 minutes or so. Where is my bio break at? There it is. There you go. Redeemed. Fantastic. All right, we will be right back shortly, my friends. Ooh, can I? Don't like that. We'll see. Anyways, I'll be right back. Oh. We are back. Okay. Yes. Thank you, Lord Merc. 1, 2, 3. I am definitely right now just doing price projections. So when you're setting yourself up for trading, technical analysis is a part of it. So I'm just breaking down a little bit of my thought process that goes into it. I do spend a lot of time in the Q&A sessions, and I'll even dedicate streams to entry level investing concepts, and I'll go as basic as balancing a checkbook with folks and helping to kind of understand those concepts. But also on the flip side, because my audience is so diverse, I do spend some more time in more advanced topics as well. I would rate this as probably kind of mid-range content. This is for folks who've done a little bit of trading and are interested in learning how a trader would think through some things to learn. It's closer to the advanced side because I did a huge breakdown at the beginning, but I'm not going through the step every time. So if you want more rationale behind it, go back in the VOD to when I did the review for SPY. That's the S&P 500 index. That'll show you step by step what each of these columns are doing. But don't feel obligated to go back and look at that because this is for active trading. If you're new to investing, my guidance to you is just kind of hang out a bit, join the Discord, ask questions as they come up like you have been, which is fantastic. You're doing great. And I will continue to try to answer and field those and kind of give more along the way. So ATR stands for average true range. Oops, exit draw mode. I keep doing that. And that is the difference between the high and the low over a given period of time. I'm using 28 days right now, which represents roughly 1 month worth of trading. And that gives me kind of a gauge or indication on what volatility expectations are for that stock. If you want to be a long-term investor, you are in the right place. I'm one of the few channels that focus on not only technical trading, you're here on a Tuesday, so technical's the topic, but also fundamental investing. So I do breakdowns on balance sheets and understanding the price to earnings ratio and identifying value in longer-term investments. This is more kind of a beginning of the year. I noticed last year I got a ton of questions on price targeting. So this is my attempt at the beginning of the year to give some price projections for some of the more popular stocks and questions and whatnot. Also, thank you so much for the follow, as well as Mitch Weston. I missed you a little bit ago. Thank you for your follow as well. You probably did it right as I did the bio break. It's about the right time. Anyways, thank you guys for the follow. I appreciate it. Welcome to the channel. I hope you're finding value. And again, I promise, after I finish this sheet, I've got another 12 to go. After I finish this sheet, we'll open it up to just general Q&A stuff. So it is not going to be a full stream of me just filling out Excel data, even though that's my target. I have a cat on my balcony. I never have a cat on the balcony. Dogs, you're failing. They're completely passed out. And the cat's just sitting here chilling. The cat wants in, love. He's scratching at the door. There's a cat just on our balcony. That's weird. So the reason it's so shocking is because we're on the 3rd floor. That's how you become a cat owner. They choose you. Exactly. I grew up with cats. I don't hate them. Like, really, I don't. But I also don't want cats because I don't want to go through the work of toilet training a cat, and I hate litter boxes. I just do. My wife wants to feed the cat. You know the cat's choosing you, right? If you feed the cat, it will never go away. She's going back to her office now. All right. All right. We're going to go back to the stream at hand. Walgreens boots. Let's do our price projection. We did finish Fibs, right? Amazon Fibs. Yeah, we're good. All right. Walgreens. Let's do this. WBA. Boop, boop, boop. Ooh, decline. Are they going to continue decline? Consolidation, breakout. Yeah, no, this might be a reversal standard. La Dune, you've been waiting the whole stream for Walgreens, right? All right. Current price on Walgreens is $41.27. ATR on this is 125. Oops. Okay. High price target based on that is $63. I am actually okay with that. That's high end. Let's go look at them. This is one I do want to look at. Excuse me, from a fundamental standpoint. For those who've not been following, Walgreens and CVS are both depressed in price. Obviously, challenges like everybody else regarding COVID. Also, they decided to foot some of the bill in vaccine distribution, and so they've got costs for that, and also COVID testing. So them spending that from an expenditure standpoint was money out the door. They're giving their own forward projection right now based off the current price at an 8 or 7.99 PE, which I find very attractive. Their dividend is also 4.52. In previous streams, I did analysis. I don't think that the dividend is at risk, and I do think that they are excuse me, I used to be able to speak. They're situated well to be able to actually hit their targets and expectations. So with that in mind, we're going to go ahead and believe them on that PE. We're going to take them to half of what the current PE is, which was 37, I believe. We're finally up to. Yep, 37.4. So 37.4 divided by 2, that's 18 PE. We think they can get up to an 18 PE. 41 by 8 is 5. So 5 times 18 would be 90. Is that legit? 40 divided by 8 is 5. Yeah, I did that right. So 5 times 18. That's a $90 price target on Walgreens boots. And that one is actually going to be closer to fundamental analysis. Not fair value, but I do think that's actually obtainable. So my price target is on 90. I'm going to leave it rounded and clean. That's fine. And now Fibonacci. From the high to the low. And that gives us a fib at 118.42. This, I will say, not highly likely from a fib standpoint, but could happen. So 118.42, and there you have it. I do think Walgreens is actually going to make a move probably in Q2 with vaccine distribution, as well as that should be the opportunity that they've been looking or waiting for to be able to show a return to profits. So I'm going to say Q2, maybe Q3, but I'm putting it in Q2. All right, Palantir. So this is a fan favorite as well as one of my favorites. I like Palantir as a company. The main reason I like Palantir is because their IPO, a lot of people are like, oh, I don't know what the hell Palantir does. The more people who are clueless, the longer it has actual value to me as an investor. They're a data analytics security group. They do a lot of work. I've been following them since like 2014. I think that's when I first started. They came across my radar, 2014 or 2016, but right in that range. And anyways, so I like Palantir versus a lot of the other tech IPOs that came out super overhyped this year. That being said, we're going to just stay relatively consistent in our methodology here. We don't have earnings data for Palantir yet, and on a company like Palantir, I would like to have more of that information. I think they gave us at their IPO some back-end data, but I don't have anything after they factor in the shareholder expenses in regards to the actual offering of their IPO. So I'm not going to have the financial data I want on Palantir until Q2. But we're going to work with the information we have and get some price projections here. So currently 24.32 ATR on this. Come on now. Is 207. Yeah, the biggest volatility range, but it is an IPO, so it's not super surprising. Yeah, max percent move of 460%. That's ridiculous. But that's actually not bad. Low, that would actually default to 0, even though it's negative. You're waiting for $20. Hey, that's a good entry point if you can get it. Not that far away, by the way. And let's go look at what we have here. The LTR. Statements. Good, good. All right. Let's try earnings and see if they have it. They do. Loss of 52 cents. Don't like that. That's all expenses. Yeah, they don't just they just simply, I should say, don't provide enough. So what I'm doing instead is I'm going to pivot. I'm going to look at market cap. So they're currently at $40 billion. We're going to look at some comparable companies in the space in terms of size expectations for recent IPOs and market share. I do think that they're going to pick up some more traction in that aspect, but we're going to compare them from a market cap perspective. So currently listed at $40 billion with a $24 price. So that would be... oh yeah, there you go. There you have it. 1.74 billion shares outstanding. I was going to say almost 2 billion shares outstanding. So that's it. Snow, who I hate. We're going to compare here. Currently at $80 billion. I really think that Palantir can match that. If they do, that means that they're going to double in price. Who was it? Cloudflare, right? Mm-hmm. Cloudflare. What is no, CrowdStrike. That's the one I wanted. CrowdStrike 44, so that's on par. Wouldn't see a severe increase to that. Let's go back to Palantir. See who the market just classifies them against. Peers. VMware. I think that's a fair one. Market cap on VMware is at 60 billion. So 58 right there exact. All right. So based on just market cap expectations when trying to align it, I'm going to go ahead and say that Palantir can support a double their current price. So that's going to put it at times 2 equals that times 2, straight up. $48 is my price target. And then the Fibonacci from the high to the low. Fibs are giving us 48.34. Holy cow, guys. It's great when it's that on point. All right. 123 says, like when we buy, is it okay to buy one stock? It is. It really is. The reason why you would buy one is because you don't have enough money. So obviously you're new to investing. First off, welcome to your journey. I hope that you do find a lot of value here. And help. But my guidance is you've really got to understand your overall expectations for managing your finances. So before you invest in your first stock, there's actually kind of a list that I go through with folks. And that's first, making sure that your debt's paid off. Second, making sure you've got an emergency fund. And third, making sure that you've got some form of real assets accessible. So something that you can sell off in physical form, a house, good house equity, hopefully, a paid off car or vehicle, or some other asset that has exchange value. And the reason for that is because when you start investing into the stock market, especially as a new investor, it is at the start speculation. It takes a long time to really learn and understand disciplines. You said you're a long-term investor, so that means you should be starting to save for a retirement account. So do you have a Roth already or a 401k with your company? Have you opted into any ESPPs, like employee stock purchase plans or anything like that? Those kind of questions set up. Do you have the ability to provide for yourself just for medical care, right? Do you have the correct insurances and safeguards in place? Okay. You're still studying. That's great. There's a lot to learn. You're in the right place. We do a lot of teaching, so that's good. Hunter's good to see you again. Says that is right. Palantir PT plus minus 12. You agree? What? Price target of minus 12. Hunter, get out of here. We like Palantir. No, it's fine. If you don't like it, that's fine. and reality is, you know, Palantir could go to zero because nobody knows what they do. They are super complicated. But honestly, they're not. They are changing data analytics, and the power and predictability behind their infrastructure and AI is ridiculous. Accuracy, I should say. Aren't they ex-CIA? No, but they have worked with the CIA. Government contracts won't allow them to go to zero. Yeah, it's true. Yeah, no, I do see it right here. Price target, but that's the low. So this is low. This is my high-end target, and this is the calculated high target as well. You'd have to go back to the beginning when I did the S&P, so about the 30-minute mark or so on the VOD, to get the full walkthrough on my rationale. But yes, that is one price target. There are 3 price targets being provided for each. And the reason I highlighted this one is because that's the one I'm actually providing as my own price target. 1, 2, 3. So let's say you've got $600 now. How do you make it into $3,600? Do you buy Palantir? That's not how investing works, my friend. Keep studying. Keep studying. All right, Coca-Cola next. Oh man, why does it always keep doing that? All right, Coca-Cola currently at 52.15. Come on now, 0.15. And then the ATR is at 98. 102, that's not horrible. So their high price target, $69. I did look at Coca-Cola. I think that they're overvalued. But, oops, don't need competitors. With this, by not a ton. Which means they still got a little bit more upside. Increase of roughly, I'd say 10 on the PE. So that would be 17 divided by 27. No. I think it's 10 divided by 27. Well, actually, if I'm being fair, 8. 8 divided by 27. 29% increase, 1/3. Yeah, fair enough. I'll go with that. That's going to be my price target. Equals that times 1.28. There you go. 66 is my price target to the high, just a little bit lower than the calculated. And then we're going to go into the fibs here. From the high to the low. Fib 161 comes in at 74.89. Oh, I didn't do price target on Palantir. I'd go with Q1 on that. I think Q1's not horrible. Coca-Cola, kinda, let's see. Let's look at momentum right now. No momentum, so Q2. No, Q3. Let's say Q3. That's me. Now, the quarter time frame, just so you guys know, is just overall kind of arbitrary. All right, this is my projection and expectation. I've got a little bit of basis for it, but not like as disciplined as most of the other approaches and formulas that I take to it. So 1, 2, 3. Back to your question on the 600, 3,600. If you're willing to put in time and effort to get that type of return, because like Lord Merck says, it's 6x. I am a big advocate of learning options as a way to make a return on your portfolio. Okay, I personally pulled a 33% return just last year. So if you got a 600% return divide that by 33, you're able to replicate that. It's going to take you 18 times. Now with compounding interest, that's significantly lower because you're using the net capital. So as long as you maintain the discipline to keep it in your account, it will go much faster than 18 years. Okay. The rule of 72 to double your money is you take 72, divide that by your annualized return. This is super rough math, but it kind of works. It takes 2.1 years to get there. Okay. You want to 6x your money. So on that, you times this from 2 plus 3 is 6.5 years to get there. 6.5, roughly. And you will more than double your money. But do not expect that you're going to get one stock, one play to pull that off. Okay. This takes a lot of time and discipline. And the real key to success when it comes to managing your finance is take your time. Okay. As soon as you learn patience, you're going to learn that trading strategies, whether it's active or investing, change dynamically. Okay. It's up to you to step back, assess, and say, okay, how can I make the most out of the current market conditions? Otherwise, you're looking at just putting your money into an index fund. Okay. If you put your money in an index fund, the average annualized return for the S&P over, say, 20 years is going to be roughly 12%. All right. 72 divided by 12 at 6 years. Okay. To double your money at that point. Times 6 years times doubling your money times 3 would be 18 years. That's the first rough that I gave you. So passive do nothing. You could probably get that 6 times return in about 20 years. And that's set it, forget it, let the market do what it's going to do. If you actively take a role in managing your account, you can do this in 6 years. When do you sell? What's a good profit loss? That comes down to bankroll management. It really does. So there's a lot of additional things that kind of go into it. 1, 2, 3. So just calm. Take your time. Really. Don't feel bad because you go online. You're gonna see 101 sales pitches. Right? Give us your money. We're gonna show you the 78%. Whatever successful trading strategy, learn how to take $500 into $1 million, et cetera, et cetera. That's all hyperbole. That's all sensationalism. None of it actually has a long lasting impact on traders' lives. You go in, you lose a bunch of money, you learn a couple of lessons, if you're lucky, right? And hopefully you live to trade another day and start investing. Bankroll management is for if you look into gambling, that's telling you how to manage risk in your portfolio or your bankroll, as it were, how much money you're willing to risk on a single trade. Okay. All of these things are definitely important in an investing journey. And you're not going to get all your answers in one day, not going to get your answers in one stream. Okay. I started when I was 12, investing, like learning about it, actively investing 16, started also teaching, 16, 17. And then I've worked in finance for over 16 years of actually working in the industry. And I've got 19 years of overall finance experience. I was licensed as a broker for 11 years. I did everything from actively trading, working on a trade desk, placing trades for clients, helping them strategize trades, doing technical and fundamental analysis, to training brokers, and also managing multi-million-dollar portfolios. And I took all of that knowledge, left on my own, started a company, and I found myself back to what I know, and that's finance and trading and training folks. So I'm here to teach while on stream, answer as much questions as possible, and then actually get into it myself. Okay, so I had my highest net worth was over $700,000. Current net worth is much closer to about $100,000. Not loaded, but I don't have to work a day in my life if I don't want to, and I can actively manage my accounts and finances and portfolios. So I'm in a good place. but I wouldn't call myself loaded. I'm working on my way to get to that. And this is just one additional project to hopefully provide value to the community, to hopefully also get some fans of my approach, and hopefully find one day a hedge fund management position out of this, while still getting to talk and teach people about trading and investing. So my own money, I've got roughly $30,000 real in the market right now. You don't know what all that means, but you don't want to work in the future. And if you don't want to work in the future, you need to learn how to have your assets work for you. And that's investing discipline. Chem Life, poker background helped. It does. And that's something so many people dismiss. And that's why I get mad at folks who focus 100% on allocation models for portfolios. Because they don't take into account risk management. They're like, oh, if you just have, all your assets tied up in different asset classes, you'll be safe. That's not true. And it's especially not true for small portfolios. Never all in on anything. 100% La Dune. And many of us have to learn that lesson the hard way. I've never gone all in on one thing, so I can't say that I've learned that lesson the hard way, but I have lots and lots of folks that have done the same thing close to me in my career and through my investing journey. So there you go. Hey, Trader X, thank you for the follow, as well as Karma. I missed your follow 8 minutes ago. Welcome. Thank you. Hey, the worst tank. Good to see you again. You lost a multi-million international-based high-tech company. You lost all your personal self-worth, which was in the millions. Though you've not gotten back to those levels, you're getting there. So keep fighting the good fight. Thank you very much. I actually am very comfortable. Like, I'm not going to, because it's not who I am. But I could live at this level for the rest of my life and be fine with it. It's not going to bother me. I am happier. I have more peace. I have more clarity now than I have ever had in my life. And I'm setting my own schedule. Like, literally, I am taking 9-ish hours, 4 days a week, to focus on not just the stream and the community, but actually doing stuff that I'm passionate and creative, able to exercise my creativity. And I never really had that in my life. It was always constantly falling from one challenge to the next and just trying to stay ahead of everything. So there you go. But welcome, the worst tank ever. It's so good to see you again. Happy New Year, by the way. So diversify. Yes, diversification's important. 1, 2, 3. But the reality is that's a strategy that needs to be in more focus, just in the traditional sense that it's perpetuated to everybody on larger portfolios. Smaller portfolios by default are kind of forced into a level of concentration, because even if you buy an indexed ETF, you're still technically concentrated. So that's why I focus a lot on bankroll and risk management. Happy COVID, correction, COVID free. Yes, Happy New Year to you as well, the worst tank ever. That's hilarious. Great typo. But that does bring up the point. COVID's not gone yet. It's not going to magically disappear. Go get your vaccinations, folks. Do it. Do it for your grandmama. That is the dream. Better to get a mortgage and stocks. So a mortgage is not technically an investment, and it's definitely not a retirement strategy. You've got to be willing to put in the time and the effort to learn about finance management. Do it for Daddy Brian. Yes, do it for me, pretty please. Yes, COVID plus 2.0 is out, but don't worry, the vaccines address that, so it's all right. Lortano says, your friend put most of his portfolio last week in QS at 120 a share. Yeah, see? There you go. Some people have to learn the hard way. That's a horrible thing. Welcome. Thank you for the follow, Numo. I will definitely do the stream raid, but please let me finish this Excel sheet first. All right. I know I keep jumping in and conversating, but we want to knock that out. If you're okay with it, Numo, I'm going to promise it after the Excel sheet. If you do want the channel points redeemed, just let me know. Tell me. Either way, you get a refund on the channel points. All right. So. Complete. And reject. There you go. You should have your refund. Welcome, by the way. Thank you so much for that. All right, let's finish this Excel sheet, guys, and we will move back in to all of it. You didn't know what that was. So stream rate is a mini game that we play while on stream at times. All VODs are on the Twitch homepage. I will be starting a YouTube channel to track older VODs, but for now, they're all there. 14 days is how long Twitch keeps them for now. All right, Hunter says, what would be the point in PayPal and Square's existence if any bank could authorize? Well, technically, any bank can authorize cash transfers and whatnot, right? Cash App, Square, PayPal all exist because banks are inefficient. So that's where it is. Jay Brown, yes, I can put CRM if you remind me as soon as I get to the end of the sheet. I'm glad to do that. All right. I like Salesforce, but they didn't make the list today for whatever reason. All right, let's do fuel cell. I think I'm relatively quick at these now. FCO. We're halfway done. I like it. All right. Okay, current price 11.18 we'll call it, and 108. Wow, what? That's a huge volatility range projection. Just standard price targets giving us a 30.60 on that, negative $8. That's kind of funny. So I really, I have to say, fuel cell is one of those ones that fall into the speculation category for me. I do think hydrogen's going to be big. I don't think it's really going to take off as soon as people think it is. That being said, we're in a highly speculative market. They have a past of $106 on the high side, currently losing $1.42. Do they have any projections for actual earnings? Well, only a loss of 7 cents, so they've done a good job pairing losses. Revenue, 19 bucks $19 million. So let's do it that way. We're going to base this off of that. So 19 times 4 divided by... So it's 0.076 divided by how many shares outstanding? Oh, no. It's 76 million divided by 319. 23 cents a share earnings. And then this would be speculative, so times 30. My own price target for high side on fuel cell only comes to 714 in best case fundamental analysis. So let's double it. So it's an upside price target of $14, right? 14 what? 14, we'll round that off to 14.30. All right. So this one's one of those ones that are going to be kind of almost 100% arbitrary. 14.30 is my price target on that. Again with the drawing of the flat fibs. Stop that. All right, top to bottom. And that gives us a 2167 on the fib. So Fibonacci projection saying it could get high, as high as 2167. The volatility indication says it could go as high as $30.60. I'm only giving it a high side price target for next year of $14.30. Probably going to go higher, but that's mine. Rick, hey, good to see you again. Welcome. Says, join late. Did I come up with the list of stocks on your... How? Arbitrary. I just asked everybody. All right. So Google. Currently 1737. ATR is 3760. All right. So volatility price target on that would be 2400 on the upside. What do we got? All-time high for Google, right? Yeah, we're all-time highs. What do we got? We've got a little consolidation here. Have we closed that gap yet? We have not. So 1653 on the downside. This is giving it a low potential of 1,000. I don't think it's going to go that low this year. So I do think it'll probably drop to about 1,600, maybe even down to the 200 SMA. Let's go look at their fundamentals real quick. $30 times earnings, 28 is their own projection for the year. I don't think from a valuation standpoint it has a high. All right, so this is going to be based off of the S&P's projection, which is 133. So this equals that times 133. So 2,300 is my target on it, and that's only because I don't see a lot of anything justifiable on Google's own merits to move much further than that. Fibonacci price target, high to the low. Oops, it's actually much lower. Come here, down here. There we go. 161 would be 2385. So, and 23 cents. What do we got? Fuel cell. Let's do view, freeze, row 1, view, freeze, column 1. There we go. All right. Fuel cell. I really think this is a Q1 play. I think it's hot right now. It's going to keep moving. Google. It's got a little consolidation, and I do see a retracement to close the gaps in the first quarter. So this would be a Q4 play. Or projection, I should say. Intel is next. Also, for anybody just joining the VOD at about the 30-minute mark, so we're kind of 2.5 hours in now, but at about the 30-minute mark is when I started, and I provided the full rationale for the sheet. I am happy if you guys ask to recap that after the fact. But we're going to start not answer that question now. Go away, Fib. Okay, so Intel... I again think that they're going to be okay long term. Like I said, they've got 5 years cash on hand. They don't have to make $1 to keep their doors open for the next 5 years. Obviously, they would want to, but they don't have to. That's how big of a company they are. So I don't think this trend is going to continue, but I don't expect a lot of upside. My personal price target on this is only going to be about 60 maybe $65. So I'll split the difference and say $62.50 for myself. And the reason why I'm not giving a lot of high expectations for Intel in the coming year is because AMD is still catching headlines, positive headlines. So that's where they stand. I don't think that Intel's going to be a winner this year, but they are still, in my mind, considered long-term valuable. All right, so what do we got here? Current price is $50.40. And ATR is 139. And that fills in the rest. And then let's go for the fibs. That one? What time frame? I'm going all the way back to 2015. I don't need to go that far back. So we'll cut that down. I'd actually put it down here. And that gives us a fib projection of 85.73. All right, Constellation Brands. This is another name that I'm overall bullish on. I like them if you are excited about playing the cannabis or pot plays for legalization. I really think that Constellation and MO own enough assets and IP to help them roll that out once that gets federal approval. They're also large enough that they're not going to have as many problems with state hurdles as any of the other cannabis plays. So if you look at cannabis as an industry and you're trying to invest, the problem is a lot of the smaller companies out there are localized and limited to a state or a region of states. And that's because federal guidelines still have it illegal. So that's gonna really damper operations for them. All right, what is this? This is 2019, so I guess we will go from the actual high. Come on, fib. Oh wait, I got to do my analysis first. No cheating with the fibs. All right, current price is $216.86. ATR 443. My price projection to the upside. What's that? 111. I don't think it's going to double. What do we have on valuation standpoint here? Cue Jeopardy music. There we go. All right, 21 times earnings. Currently sitting fair 37. So yeah, I think that this is another kind of 1 1/3 times. So equals current price times 1.33. I'm gonna give it a 33% run. It's not super popular, not super hot, and it's not going to be because it's an old and boring company. But they do have access to exposure there. In specifically cannabis. So I think if anything gets started for them this year, that would be pretty significant to the stock price. 293.66 for the Fibonacci. All right, Altria, same story as Constellation Brands. Except Constellation Brands is drinks, Altria's smokables, cigarettes, e-cigs, all that kind of stuff. All right, Altria's current price $40.88 and ATR of 90 cents. So 0.9. Their own price target 57, or not their own. The volatility high would be 57 as an expectation. I think we're actually going to do support resistance on this one. I like that. 51.62 is where I'm drawing it. And Fibonacci. High to the low gives us 87.17. All right, Disney. Hey, Shep, good to see you. Welcome, welcome. What about the moose? Oh, the mouse. I was like, what happened to my mouse? No, the mouse. The mouse. Sounds ominous if you say it right. The mouse. No, I can't make it sound ominous. It sounds ominous in my head. There's a way to say it. All dramatic, like. Wow, a double gap up. I don't like to see that. A triple gap up. 1, 2, 3. Did this close? Yeah, that one closed. Okay, so we've got a double gap that I don't like to the upside. This gap's been addressed, so I don't care that much. Which means high volatility on the stock to the downside. I'm not going to be aggressive as high-end price targets because I kind of think that this would fall into a category that it may have already seen its run up. So let's look at earnings real quick. Fundamentals. 37 is their projection for the year. It's actually kind of on par with the S&P 500. So yeah, I'm personally going to give this a relatively stale marker for the year on high-end price projection, unless they have something earth-shattering, like they figure out how to make the summer vacation rush and open their parks. It's a possibility, but I don't think anything short of a publicity stunt like that is gonna give them more momentum. Again, long term, we still like them because they've got a lot of assets, ESPN not least of which. And if they can get online streaming for ESPN, which is a possibility, we're going to see another ridiculous move in the stock. What is their volatility? So 178, 459. So what is this? 178, 77, 178, 59. 139. I don't think a full 39 is coming up, so 1 point. Probably cut that in half, and we'll go with 1.2. Maybe 214 on the high side for Disney. There, I'm gonna put that as a Q1. That's Intel. This is a Q. This is a Q4. Nothing exciting happening for Intel. Q4. Constellation and Altria, those are both Q3s. Sorry, I know I jumped around there, but I noticed I forgot the quarter projections. And Fibonacci for Disney. Oops, that's resistance. There we go. All right, Fibonacci for Disney is 247.15. Ah, look at that. We're almost done. All right, MRO, Marathon Oil. So again, we're not like super into the energy sector right now, but Marathon Oil being a midline partner and also having diversification in nat gas, I figured it was worth kind of projecting out a little bit for an expectation. They've been depressed, so if we do get a pop, we're curious. I'm curious on how high it could be. So 747 right now is where it's at. ATR is 36 cents. That's 264% volatility. My price projection is actually going to be based off of support and resistance because of how depressed it is. I'm thinking this level here looks pretty solid. I'd move that up just a hair. Come on. There we go. Yeah, we probably close that gap. There you go. 1661 is the level I like. So past support here in this range, there was definitely a little bit of a struggle before it dipped down. It tried to recover before breaking down to the downside. So 1661 is my target to the upside. Oops, 61. And the fib gives us potentially 3754. Marathon oil, there's going to be a lot of volatility. OPEC, Biden administration announcements, a delay. So this isn't going to be until we get Q4 consumption. I would say that we'd get some stability at that point, but things right now just not looking so good. So I'm putting that one way out there. UNH. All right, this one's trading at 345 and 780. Not a lot of volatility. 485 is the volatility target on that. Let's see. It is in a positive run. It's kind of moving, so I would actually almost cheat on this one in a sense. I did all the work, so it's not cheating. I'm cheating off myself. But I'll also match the price target on that one of 485. Let's check valuation though real quick. I'm not as dug into UNH. 19 times earnings. Ooh, no, that, well, hold on. What do we got for earnings? So 1740. Let's see what that is. 174 times, say 25 times earnings, 435. Okay, it's believable. Yeah, I'll stick with that. I'm going to stay there. If anybody goes back to the VOD and the high was actually 435, just remember I called it. Anyways, fib projection. Come on. Down to the downside. That upside is 476.44. Healthcare, I really think that's probably going to be a Q2 play. I think it's got momentum. It's going to hit. We're going to see an early peak on that. Unity. All right, this is another one we don't have a lot of fundamentals on. Recent IPO this year, so we also don't have a lot of technicals to go off of either. My price projection, though, I've got a trend line here, so let's project that out. It's held relatively well. Where are we at? I'm gonna say 60 days out. So 60 days on the left gives me a trend line projection at 176, right? Exit draw mode. Oh wait, what day is this? March. Maybe we go to April. Let's go 90 days out. There we go. All right, April would give us 214 as a trend line projection. All right, back to Unity's price. They are 148.77. And ATR we have 983. See, even my price projection wasn't that outlandish. The volatility gives it all the way up to 325 at some point this year. Also, though, a loss of $30. So 214, not super out of the realm, but that's my projection. I expect that at the beginning of Q2 or end of Q1. So we're gonna go Q2 as that as my projection, and fib. Let's get rid of all these extra periods. Back to 3. Fib retrace. High here. Ah, man, clicked out. To the low. Fib's price projection comes to 242. Right? Yeah, 242.80. There we go. Last one, gang. Last one. Unless anybody wants me to add one more. But we'll do it. Do I know the one for Bitcoin? Yeah, I can do one for Bitcoin. I don't see why not. I love it. But yeah, let's go with NVIDIA and Bitcoin. Porto asking for crowd. Sure, why not? We go UTC and oh no, CRWD. PSTH. Who are they? We'll find out. All right, and that's gonna end it. After that, we'll be done because that hits exactly 20. I'm not gonna do any more after that. All right, NVIDIA. And I'm going to do Bitcoin last, even though it's next on the chart. I'm doing it last because I have to go to a different charting platform. My broker still doesn't allow for trading, nor do I expect them to add trading to Bitcoin or cryptos for that matter in general. So NVIDIA is 536. I can't cheat and put the fibs first because that's cheating. 536 and what? 94.9. ATR is 1562. What is their current beat? I really do think this would probably be 40 times earnings plus this year. Yeah, their own current price is 45 almost times earnings currently. What do we got earnings? Lots of gains. I don't think new norm's gonna adjust it much. So this is an all-time high situation. $117 for Google, 150 for Intel, 130 for Amazon, 220 for Tesla. All right, so I'm gonna put this in the realm of Tesla, but not quite as high. So Tesla was a expected return of 47.8%. So we're gonna do that equals that times 1.20. I'm gonna put that at like a 26% return. So there you go. My price target on it is 676. Fib time. I like how I'm using the slang fib for Fibonacci. It also means lie. Find that a little ironic. 837.29. NVIDIA is another Q-ish, 1-ish play, but I'm going to put it at Q2, beginning of Q2. All right, crowd, and then what do we got? Ding, 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 market close. Don't forget about the couple of penny stocks. Give it a fly. This is not actually a portfolio. This is just a list of price projections. This one's not. This is not a investment portfolio guide. This is just providing price projections and hopefully a little bit of insight in terms of JP. Yeah, I'll do CRM. I'll add that. That's okay, because you wanted it reviewed, but we'll add it to this list here. Anyways, yeah, it's to help kind of give a volatility gauge for the market, and also to realistically show a little bit of just my analysis on the market and how accurate or not accurate this can be. Can't see full Excel. Hide your face. All right, I'll hide my face. No, I'll just move myself up to the top. There you go. Put myself on the top of the screen. Okay. Crowd, PSTH. Who is PSTH? We'll do that after crowd, though. RWD. What in the world was that? I don't even know what that was. All right. Go away, arrows. Currently 211.24. Did I turn up? No, I didn't. I don't know where I was typing that 211 at, but it went somewhere. 921. My price target. It's kind of on a run. I don't think I'm not as bullish on CrowdStrike as everybody else is, but I also like them more than Snow. Currently 500 times forward earnings. Any big news expectations for Crowd? I mean, I could literally just do this Excel sheet like the entire day, but there's got to be an end somewhere. I called 20. If I deduct SPY and Bitcoin, technically that's 20 equities. But you need somebody else to approve Lulu. All right, I'm not getting any feedback on crowd or conviction, so I'm not going to give it that high of a price target. Rising volatility. I do think that that's going to continue to push it up a little bit for momentum. Let's go here because that's bothering me. Center, thank you. Let's see. Come on now. 237. Sure. Let's say it's got another 33-ish % move potentially. All right, so 280 is the high price I'm going to give it. Fibonacci. Oh, darn it. $349.13. All right, who's this PSTH? Oh, this is the Pershing. No, I'm not going to put a SPAC on here. Pershing Square can go out. And I'm actually doing a pretty in-depth review on SPACs on Thursday. So if you want to review that, come back on Thursday. But we're not going to put Pershing Square on this list, which means Lulu has a spot now. We can put Lulu on in Pershing Square's place. Should have known that. All right, Lulu then. All right, currently trading 366.50. ATR on it is 1160. This is an all-time high situation, right? Yeah. Okay, so Lululemon, let me double check the valuation, but I believe that they're overhyped. The whole thing is, on 11 a.m. Eastern is when I start my streams. Or wait, no, 11 a.m. my time, 1 p.m. Eastern. 1 p.m. Eastern. Anyways, so Lululemon I feel like is kind of overhyped. This was a let's get it pumped because of COVID, yada yada. They're already at 52 times forward earnings, which means I think that they're already overinflated. So the continuation of this rise is going to be based just off of existing momentum and volatility. If it's got any more to the upside, it's going to be based on that. I'm going to say, I'm not even going to give this one a full 20% more to the upside, actually. We're going to go equals that times 1 point, let's say 1.8. I think it's generous. 118. So 432 is my high-end price target on that. Draw mode. Retrace. Fibs come in at 563.28. All right, last one. CRM, Salesforce. Do I understand that Crowd is a simple DDoS attack cloud protection software that's grown 500% already? No, actually, I've not followed CrowdStrike that closely. I know the space they're in. But if that's all they're offering, then my argument is they leave a lot to be desired. Because DDoS protections, honeypots, and anything else in that space should be considered a standard in InfoSec right now. And if that's it, no, I don't think so. Crowd will sell its cloud to Martians, which Elon will bring back. So Crowd will get 5x in 2021. Hey, that's fine. You can be bullish on it, but that sounds pretty standard run-of-the-mill to me from a security position, technology secured position. I like, honestly. Lots of folks offer protections from DDoS. Not necessarily just on a cloud infrastructure, but whatever. All right. Question with Lulu is always, do I like my companies that sell pants to be priced like companies that make cutting edge technology? The answer to that is usually no. Agreed, Filthy Cash. Agreed. And that's why I didn't give them so much upside potential. I think momentum's going to carry them a little bit more, but I wouldn't see a lot of value there. I don't see a lot of value there, I should say. All right. Got a gap. Is this closed yet? Oh, stupid fib. Exit draw. Is this closed yet? Yeah, barely. But I would qualify that as closed, and it's going to touch any day now. So, all right. 221.52 current price. ATR is 678. Giving us 161 volatility. Let's look at valuation. $62 times forward earnings. Yeah, it's not horrible. But I honestly think it's going to come back and probably revisit previous highs as expectation. I don't think it's going to take off that much. So 290-ish, 285, 290 is my price target. I'm going to go 290. Nice round number. You know what? I think they might even test 300 bucks. So 300 is my price target on the high side. I would be okay playing that. Dollars, thank you. And then fib on this one. Fib gives us 389.12. And there you have it. All right, quarters, and then we're going to do Bitcoin, and then we're going to be done with this list for today. We'll revisit it later, so don't worry. Crowd, I don't know enough, but I kind of gave them a little bit. So this is a Q1 projection. Lulu is momentum, also Q1. Why do I keep doing that? And then finally, Salesforce, 300 price target. That's going to take a little longer. Q2, maybe Q3. I'll put that late Q2, early Q3. All right, here we go. You'll buy Tesla or Corsair pants, RGB pants. I like it. That's fantastic. All right, let's go ahead and pull up Bitcoin. And then we are done with all these yada yadas. Here we go. Continuous contract. We'll go with the next contract. All right. So 34,805 is its current price. Oh yeah, I can't Alt Tab anymore. Yeah. 34,805. Let's go full chart. Indicator. ATR. Settings. Check, check. Inputs. There we go. Thank you. 28. All right, ATR going on you. Am I on daily? No, I'm on the hour. Go to the daily. Thank you. Holy moly, look at that spike in volatility. That's not going to be maintained. So right now it is giving me 1487 on the current range. That's pretty ridiculous. I think it's kind of peaking in volatility, but that it could still go a little bit more, but that's pretty high. So 1487, 233. Well, it's not horrible actually. That could be worse. No, 1, 2, 3, Thursday. So 2 days away. Okay, so high target for me on Bitcoin. I did say this. Merck's giving me 33.9. Oh, is the current price? Oh, I'm using the next contract. So I'm not using the current contract. I'm using the forward contract. That's why it's a little bit higher. Because this is an annual projection, so I don't want the next futures contract. I want the one after. Just for projecting purposes. Crypto cap total. I'm on BTC1. No, BTC2. See, right there. BTC2. Total cap of cryptocurrencies finally higher than the previous high. Yeah, and that's why I think we're going to actually get a pretty good run up this year. There's still also concerns about additional spending. Like, seriously. Like, the government spending is slated to increase this year. And with continued concerns, I don't see a lot of people running to real estate as a hedge asset. I just don't. So as long as we continue with inflation targets where the Fed has projected it, Bitcoin's got a lot of room this year. That being said, it is a volatile instrument. Let's look at their last run-up from a percentage standpoint. This doesn't give me the 2016. Oh, it's because the contract. So let's do this again. I'm going to go with the BTC1 this time. Five years? I don't. Full featured chart. Day. Yeah, that's accurate. Okay, I only get back to 2018. They don't go back to 2016? Darn. All right. Well, this move rules it out then, because that's 35. Yeah, 3,500 up to 14,000. Where did my calculator go? Oops. I didn't need the zeros. 4x. I don't think we're going to have a 4x year in BT. But that gives me confidence in projecting out a 2x. So my price targets for Bitcoin going into the year were 56,000 as the high side. So that's what I'm going to put. And it's supported, so there you go. That is my high side price projection for the year. Now let's see if I can get a fib on this one here. Come on. There you go. Scrunchy. 161 gives us 53,755. 5375. And this is probably going to be peaking mid Q2, mid Q3 even. I could see it going as late as Q3. So I'm going to put my projection for Bitcoin in Q3. Even though there's a lot more hype right now. So I don't know why it keeps doing that. Whatever I'm clicking. Hey, IVK Music. Good to see you again. Welcome back. Happy New Year. Happy New Year. And thank you very much for the resub. I really appreciate it. All right. We are wrapped up on this spreadsheet. Everything there. You guys are going to have access to it on the Discord. Let's go look.